Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is our good friend Tavi Costa, partner and portfolio manager at Crescat Capital. Welcome back, Tavi.
Thanks for having me. Looking forward to this.
Yeah, it's always great having you on, Tavi. The world is going absolutely crazy. We have recessions being called from Germany all the way to New Zealand. They're finally coming out and calling a recession. What's going on out there? What's concerning you in these sectors?
Well, it seems like we're getting more and more confirmation from data in general that things are getting worse. We've had confirmation from the yield curve back months ago that we could be in a major deceleration and a recession in the months ahead. And so now we're starting to see macro data confirming that. We've had earnings releases recently. I think that has also proved that the bottom line of most companies are deteriorating significantly, but the valuations remain at la la
Mhm.
land. And I think it's irresponsible for any investor that is not long volatility today, because there's such a strong case for you to be long or for the risk for a volatility event in the following weeks. You're looking at companies like Apple with one of the lowest volatility, implicit volatility in their put options and so forth that we've seen in history. And so many companies are in the same position, but you continue to see deterioration of fundamentals and
Mhm.
things that point to the direction that valuations are completely unjustifiable. So I think there's a lot of opportunities on the short side of the market.
Absolutely. And linking this to precious metals and silver, we're watching the price of silver closely, and it's getting hammered a little bit. What are you seeing with silver? What's your outlook from now, Tavi, to let's say the end of 2023?
I think silver continues to look really resilient relative to what we're seeing in the economy, and that
Hmm.
is the case with most tangible assets in general. I think the recession that is likely to play out in the following years here is going to be very unusual and different than what we saw in '08. It's going to probably be like what we saw in early 2000s when the tech bust occurred, or also stagflationary environments like the '70s. The problem when I say that is a lot of people think, well, is this the '70s again? No, it's very different. There's a lot of
Right.
differences, but the inflationary problem and the way the Federal Reserve is acting and the way cost of capital is acting sustainably higher as well is going to play differently. And the fact that we have such a long period of time where tangible assets have been out of favor, unloved, and really in terms of misallocated in general as well. So I think that the potential for outflows from the 60/40s, the equities and fixed income assets that are extremely overvalued
Hmm.
and also overbought in general throughout the years and throughout the decades. I think that those allocations coming out of those assets into other things like tangible assets is probably going to be the case for the following decade. And so silver continues to look good in a lot of fronts. Gold is, to me, what will confirm the movement in silver, and we're getting really close. I mean, once we break out through this 2000 level with authority, I know we did it recently. We had a triple top.
Hmm.
I think we're going to blaze through that record price that we've had recently, and that's going to be the beginning of a new gold cycle.
Yeah, you said this week on a post on your LinkedIn page that gold looks to be getting ready to blaze through this historic resistance and moving substantially higher. Where do you see gold heading for short term from now to 2023? And what's your take long term from now to, let's say, a little bit to 2024? Does it even matter what the price of gold and silver is with all this economic turmoil, or are you still watching that closely?
Now, I'm watching closely the price of gold. This is one of those pivotal moments that I think any investor should be watching that
Wow.
very, very closely. And the reason for that is because, first, we've had the yield curve inversion issue that historically has always confirmed that the gold to S&P 500 ratio tends to do very well. But there are months where that metric doesn't work, and that's fine. That's what we had in the last 2 months. But that's unsustainable. And in my
Right.
opinion, we're about to see the upside. And gold has been hitting this historical resistance, the triple top, that a lot of people believe that's going to be the case, but triple tops almost never works. And so it's almost like the perfect setup. And the entire industry and capital allocators is watching that closely, because we're also seeing at first time of in many decades this change in terms of allocation from central banks that are selling treasuries now to buy gold. And we're also
Yeah.
seeing major issuances of treasuries happen today. I mean, one thing not a lot of people are talking about, since the debt limit happened or it got extended, we've issued already $560 billion of treasuries. And
Jeez.
so who is going to be buying this? I mean, the Fed is actually, their balance sheet is actually shrinking, so they're not buyers. And so at some point, those, and knowing that the deficit situation is only getting worse. So at some point, that's going to have to drive the Fed to be the buyer of last resort of those treasuries. And when that's the case, then gold is not going to be trading likely at $2,000 an ounce. It's probably going to be trading, a lot higher than that. So as we break through this record level, I think we could see a $400 or $500 ounce add to the price of gold very quickly. And so that's why I'm watching very closely.
And like you were saying, they have to be the buyer of last resort, but like, how do they avoid that? How do they even avoid, like, the Fed is absolutely trapped right now, and like, what do you think they need to do in order to get out of this mess?
Those are long-term imbalances that are becoming short-term problems now, which
Yeah.
means the compounding of pace of the debt problem is alarming. We've had for many years, everything is tied to the treasury market. We've had since the 80s, central banks have been buying treasuries, believe it or not. Treasuries were cheap in the 80s. They're paying high yields. They were at a price that was attractive. And today it's the complete opposite. We're talking one of the highest PE ratios for treasuries that we've seen in history. And so especially at a time when we've had, inflation being a problem, along with interest rates being a problem, the default risk being a problem.
Yeah.
And then on top of it, you add the issuance problem, which I think it's certainly something that is understated and will continue to be that case. And so, those issues are coming all at once today. And at some point, the Fed is just unsustainable, what we're seeing. And back in 2022, the reaction in the market from the rise of interest rates and other things, we've seen a correction from a duration standpoint, but then from that, you start seeing the deterioration from fundamentals. We haven't seen the price of risky assets reflect that as well. So yes, there's a lot of things here, but to me, it's just a gold to S&P 500 ratio. That is the opportunity. It's buying properties that own natural resources in the ground. It's owning tangible assets. This is, when people hear that, they always think, wow, this is something that hasn't worked over the last decades. And that might be the exact point of why you should be it should be on your radar, is the fact that it hasn't worked over the past decade or so, is because it might start working because of those historical trends and the macro supporting a thesis behind it. So I'm a firm believer that those things are going to be the best investments of the following decade.
Absolutely. And about a week ago, you were talking, Tavi, about the NASDAQ versus the 10-year yield, and you said one of them is lying. What did you mean by that?
Well, I meant to say that, in the last years or so, we've had yields declining, making cost of debt really cheap. As risk-free rate falls, you start to see the discounting mechanism of companies causing the present value of businesses being higher. And so you're basically borrowing returns from the future. And when you start seeing yields moving higher, that changes the dynamic. It's precisely what we saw in 2022. It's as the duration risk was finally reflected, but we haven't seen there's more to that, where there's a domino effect caused by the cost of debt rising. If you just look at junk bond yields, for instance, they've been sustainably moving higher along with 10-year yields.
Right.
And so, it's because it's not only the inflation risk, there's a lot of other things that cause cost of debt to rise. And so I think that, what we were seeing in terms of this AI euphoria, which began, if you look at that chart, the separation between the two lines, it started with the AI euphoria. And AI is a real thing. I'm not claiming it's not. I mean, I think it's a revolutionary period that we're facing, but until we see that reflected as well into improvement of fundamentals, it's going to take a while. So I think, you look at NVIDIA, the most pure play in AI today, is trading at 44 times its 2 years earnings or 2 years free cash flow, which is quadruple growth from what it is today. So, yes, it is a great company. They have, almost an incredible product
Right.
to make money in this environment. But wow, I mean, should we be paying those levels of multiples when rates are where they are? I mean,
No.
seems to me a lot of things are out of line.
Yeah, absolutely. And getting a little bit back to precious metal, Tavi, recently I seen some countries are having a lot of protests and some major mines have been shut down. Can you speak on how you approach investing in higher risk areas? Like what approach do you take?
Well, first of all, I think the first thing an investor needs to consider is can a mine be developed in that place? Has a mine been developed in the last years or so in that jurisdiction? Is something we consider at Crescat a lot. The second thing is the scalability of that project, because depending on if it's not scalable and it's also in a risky jurisdiction, is that something that is really attractive for a major and attractive to us? It reduces your optionality.
Right.
Another thing that we think a lot about is everything has a price, and it doesn't mean if the risk is appropriately in the price of that asset, and certainly it continues to be more attractive for us to be doing our due diligence. So we're not afraid of some areas that people are afraid, but we have opinions on the macro side. I think South America, for instance. I know there's parts of South America that are very concerning, but I think South America is going to play a key role in this environment where developed economies are going to be, onshoring their manufacturing plants and so forth, and we're going to see a construction boom, not only from private institutions but also from the public sector as well, where governments are going to be financing a lot of the changes in highways and airports and all sorts of things, and so that's going to create, we're going to need stuff, and
Yeah,
it's going to be difficult if we don't create incredible partnerships with places that look really cheap today in terms of assets, in terms of valuations, and I think South America is going to play a key role. So I'm paying close attention to what's happening in Brazil. I'm paying very close attention to what's happening in places like Bolivia.
hmm,
I understand that the political environment in terms of leadership is rough, and especially in Brazil right now with the shift that we had with Lula. But again, I think Brazil in general has never been so segregated in terms of politics. I mean, we never had a right-wing party with a left-wing party. It's always been very very
one-sided.
much on the left side. So
Yeah,
I think that's a big change, and valuations today and those assets are really, really cheap. So and pay attention. And Brazil is outperforming a lot of developed economies while everyone is whining about Lula. And it's
absolutely.
it's very interesting.
And when you look at a mining company, Tavi, what do you look at specifically to know like that's the money I'm going to put, or that's the company I'm going to put money to? Do you look at like the team? What do you look at specifically?
Oh, it's obviously a lot of combination of things, but
Right.
what we do at Crescat, we try to understand, number one, well, the jurisdiction checks. If it checks as far as it's not necessarily safe or not safe, is can we build a mine in that place?
Hmm.
The remoteness of the project is absolutely critical for us. Also, I would say, the metallurgy and the economics of that deposit being able to become a mine. It's checking all the boxes of understanding how much optionality do we have. We don't invest in any project that we don't believe it's going to be large,
Right.
because if it isn't large, then one of the most important parts of the investment, which is the potential for an M&A, is probably not going to be the case. And so it's one of the important aspects of it. Certainly, the team is important. I think
Right.
management team, helps you to especially should be able to not only run the business, but the other part that is important is creating important strategic partnerships with investors and folks that create that foundation of capital of that company. I looked into that a lot. I want to know where the money came from initially, from the foundation of the business and so forth. I think that's all an important aspect, because once you start seeing good results, that's going to be also reflected on the price of that asset if the foundation of capital wasn't being built the correct way. And that comes from the management side. They need to do those decisions in the right way throughout the history of the company.
Right.
The technical team is absolutely critical, but for Crescat, since we have our own team here, a geological team, we end up adding value towards that side of it. So for us specifically, it's not as much of a big deal as I would say for an average investor. So because we end up creating value through that. There's so much value to be created today in terms of that. And and understanding that, our research on takeout prices of those companies. Usually a company is taken out in the market by about 20% of the value in the ground that they have. And that will depend on being in a bull market or a bear market. In a bull market, you can be taken out of 60% of the value in the ground. And so, we model everything and try to understand what's the potential appreciation of that company over time as we invest. And so we understand, the asymmetry of each of those assets.
Do you think it's important for the management team to have skin in the game? What do you think about that?
Oh, 100%. I mean, if that's, if I think that's going to be playing a role as well. You can see very clearly that people that have skin in the game will certainly be more careful for obvious reasons, will be more careful when it comes to diluting the company and looking for capital. Look, there's a lot of brokers. Some brokers do a great job at finding those strategic investors that will be long-term, players in those companies. But majority of the brokers don't really care. They just want to get their commission, which is what they're incentivized for. And so you got to be very careful, because if a CEO doesn't have skin in the game and they also bring another broker who, really doesn't care about who is investing in your business, then it's a recipe for disaster, because you're going to get a bunch of what we call pikers, and folks that will just be selling on any positive news as soon as the stock is free trading. So those are issues of investing in small businesses that we all have to it's what makes them so challenging, but also with enormous potential for wealth generation over time.
Absolutely. Well, Tavi, it's been absolutely fascinating having you on and sharing all that wealth of knowledge about silver, gold, the economy, and even about the mining industry. It's been a huge pleasure. And hopefully within the next 2-3 months, we can have you back on.
Pleasure's mine. Thanks for having me.
Yeah, no problem. Talk to you soon, Tavi.
Talk to you soon.